Hello everyone. Today we are going to learn about final accounts. Before starting, let us just recall what we have learned about final accounts in our 11th standard. So, the final account is basically a statement which is usually created to a certain gross profit or gross loss, net profit or net loss. It helps us to detect the financial position of the business on a particular date. To make final accounts, we need to follow certain steps which are as follows. First step is journal entries. We need to pass journal entries. Then from the journal entries we need to create ledger accounts. With the help of ledger accounts, trial balance is created. Using trial balance, we can create final accounts which consist of 3 or 4 sub-steps. These 3 or 4 sub-steps are trading account, profit and loss account, partner's capital account or partner's current account. This step is an optional. And the last one, that is balance sheet. All these steps help us to create final accounts. Note: to save your time in exam, trial balance is given to you as question along with some adjustment. Some questions also consist of hidden adjustments which are in between trial balance. Let's study each and every account and statement in detail. First, trading account. Trading account is a nominal account where all expenses and losses, income and gains are recorded. All accounts related to direct expenses and direct income are recorded in trading account. This account is divided into two sides, debit and credit. The main motive of creating trading account is to obtain gross profit or gross loss. Second, profit and loss account. Profit and loss account is also a nominal account. It is the continuation of trading account. All indirect expenses, that is revenue expenses, are debited and all indirect income, that is revenue income, is credited in P&L account. This is also divided into two sides, similar as trading account, that is debit and credit side. The main motive of creating P&L account, that is profit and loss account, is to obtain the net profit and net loss. The third account, which is an optional account, that is partner's capital account or partner's current account. In this account, partner's transactions are mentioned. This account is also divided into two sides, debit side and credit side. Basically, this account is compulsory created when it is mentioned in the question or partner's current account capital is given in trial balance. We can also directly write partner's capital accounts amount in balance sheet if there is no too much transactions. Next, balance sheet. The fourth step. Balance sheet is not an account. It is a statement which shows the position of the business on a particular date, which is divided into two sides, that is assets and liabilities. Liabilities are written in left side and assets are written in right side. Capital plus liability is equal to assets. This is a formula which says that if we add all the capital of every partner plus adding all the liabilities will equal to asset. So assets are equal to liabilities. When both the total both the sides totals tallies, that means your balance sheet is correct and you have solved the sum perfectly. If it does not tallies, then you need to check where you have made mistake. Let's move further on the pro forma of trading account. Trading account for the year ended. After year ended, you need to mention the date, then debit side and credit side. A T-shaped format is to be followed as shown in this picture. This picture is been taken out from BK, that is accountancy textbook of 12th standard, where in debit side there are all direct expenses are written and all direct income is written on credit side. Further, we are moving to profit and loss account for the year ended. Debit, credit and same T-shaped format is to be followed, but it's the difference is all indirect expenses are returned on debit side and indirect profit is written on credit side. Further, we are moving on partners capital account or partners current account, which is an optional account where in debit side drawings by partners are mentioned and all the balances of the partners are mentioned in credit side. Balance sheet as on. So the balance sheet also have T-shaped format, but instead of particulars, it is on the left hand side liabilities and the right hand side assets are mentioned. All the liabilities are to be written in the side left hand side and all the assets, fixed asset, current assets are written in right hand side. Further, we are moving to adjustments. Now let us learn about the adjustment. Before learning about the adjustment, here are the some pics of adjustments which are mentioned in the form of table where it is adjustments, first effect and second effect. This pic is from the accountancy textbook of State Board 12th standard. These are some more adjustments. These adjustments are we are going to learn further in the next video in detail. I am going to teach you that how we can learn this adjustment or at least remember where we can give the two effects of adjustment. Some adjustments may also have three effects. So in my next video, let us learn about this. Thank you for watching. Hope you like it.